Hello friends, welcome to Bankers platform. So friends, this is the third part of the video, that is export credit and customer service to exporters. So already we have discussed pre-shipment credit in the previous video. So today we will discuss the post-shipment credit. So let's start. So here comes the post-shipment rupee export credit. So already we have discussed the pre-shipment credit that involves packing credit. So that is given as a working capital requirement for the exporters for making an export. Okay, so now we will be discussing the post-shipment rupee export credit. So let's see the definition. Post-shipment credit means any loan or advance granted or any other credit provided by a bank to an exporter of goods or services from India from date of extended credit after shipment of goods. So like we were seeing that, we have seen that in pre-shipment credit, the credit is given before shipment. Okay, it will be before shipment, before the goods are shipped. But when we talk about the post shipment when goods are shipped, when the goods are sent to the foreign country, after that, that credit is provided, that is called post shipment credit. Okay, after shipment of goods or rendering of services to the date of realization of export proceed and includes any loan advances granted to an exporter in consideration of or on the security of any duty drawback allowed by the government from time to time. So like some exporter, they have done the shipment. Okay, if shipment is done, so they may receive the payment in 2 months. Okay, or they may receive the payment in 3 months. So there will be a delay of the payment as per their terms and condition. So for this gap, like if they are receiving payment in 2 months or 3 months, for this gap, the bank will be financing the post shipment credit to the exporter. So by getting the credit, they can use this fund for making the next shipment. Okay, so period of realization. So the period of realization of export proceed is determined by FED, okay, Foreign Exchange Department of RBI. Bank are advised to adhere to the direction issued by Foreign Exchange Management Act 1999 as amended from time to time. So how many types of post-shipment credits are available? That we'll discuss now. So post-shipment advance can mainly take in the form of export bills purchase, discounted, negotiated. Okay. So in three form it can be taken, that is purchase of the export bill, discounting of the export bill, or negotiation. Okay. Second is advance against bill for collection. So they can also receive advance against the bill for collection, advance against duty drawback receivable from the government. So in some cases, like they will be having, suppose they are making the shipment of $50,000. Out of $50,000, the exporter is supposed to get $10,000 as a duty drawback as per the guideline. So for this 10,000, the bank can give the export credit to the exporter. Okay. So liquidation of post shipment credit. So how it will be liquidated? So post-shipment credit to be liquidated by the proceeds of export bill received from the abroad in respect of goods exported, services rendered. Further, subject to mutual agreement between exporter and banker, it can be repaid, prepaid out of balance in EFC account, also from proceeds of any other unfinanced bill. Such adjusted export bill should, however, continue to be followed up for realization of export proceed will continue to be reported in the XOS statement. So this XOS statement, you can skip this because now this XOX is called EDPMS. EDPMS. Okay. So liquidation of this export credit can be done by the any way. Okay, suppose $10,000 bill is there and bank has discounted for 90% of the bill amount. So 90 percent is discounted. Okay. So $9,000 is the post shipment credit. That is 9,000. So if suppose the exporter has received some payment of other bill. Okay, other shipping bill, they have received the payment for which they have not taken any advance. They have not taken any advance, so that fund they can use for the closure of this credit. This credit can be closed out of that. Or if they are having any balance in the EFC account, that also can be used for closure of this bill, this credit. So it's not necessary that the payment should be only done by the same bill. Suppose bill A is sent, and this bill A is discounted. Okay, bill A is discounted, but the customer has received the payment for B shipment. So by this B shipment proceeds, A, that credit can be liquidated. Okay, in order to reduce the cost of exporter with overdue export bill may also extinguish their overdue post-shipment rupee export credit from their rupee resources. However, the corresponding GR form will remain outstanding and the amount will be showing in the EDPMS statement. Okay, this XOS is now EDPMS statement. The exporter's liability for realization would continue till export. So suppose they have taken the discounting of the bill. Okay, discounting of bill happened, but the payment not received. Okay, so to keep their credit history, CIBIL score, and their repo in the market, they will make the payment from their own sources for this discounted bill. Okay, and the but in reality, the bill payment has not come. So they're saying that if it has not come, they will make the payment of the post shipment credit, but that bill will remain outstanding. This bill will be outstanding only in EDPMS. Okay, in EDPMS, this bill will be outstanding, and the exporter has to make the efforts for the realization of bill. Otherwise, this bill he has to write off. And write off guidelines also we have already discussed in the export topic, that we have separate video there you can go through. Okay. So now again this is continued review post shipment export credit period. Now here talking about the period. In case of demand bill, the period will be normal transit period as specified by FEDAI. So that all you would be knowing what is the NTP. NTP given by the FEDAI for demand bills. So that you have to write in the comment section. Then we'll get to know how many of you know about this. Okay. In case of usance bill, credit can be granted for maximum duration 365 days. So if it is a usance bill, maximum duration will be 365 days from the date of shipment. Okay. And grace period, if any. However, banks should closely monitor the need for extended post-shipment credit up to permissible period of 365 days. Now, normal transit period means the average period normally involved from the date of negotiation purchase discount till the receipt of the bill proceed in nostro account of the bank concerned, as prescribed by the FIDI from time to time. So, normal transit period is there. So, the normal transit period is 21 days. Okay, 21 days. And for some different countries, it may vary. That will depend on the guidelines given by the FIDI. That already we have discussed in our FIDI video. Okay, all rules are there in FIDI. There already normal transit period is discussed. But generally, we remember that 21 day is the normal transit period. Okay, an overdue bill. In case of a demand bill, is a bill which is not paid before the expiry of normal transit period plus grace period. And in case usance bill is a bill which is not paid on due date. So, which bill will be called overdue? The bill in case of demand. If it is a demand bill, in that case, the overdue bill means the transit period plus grace period. Suppose transit period is 21 days, grace period is 5 days. Okay. So, total we get 26 days. So if one bill is not paid for 26 days, so then we will say that bill is overdue in case of demand bill. But when we are talking about usance bill, when we are talking about usance bill, so in usance bill already will be given like payment will be done in 90 days. Okay. Payment will be done in 120 days. So already the term is defined. So in that there is no grace period involved. So whatever the due date is there, written. Suppose it is written that the due date is 20th August. Okay, 20th August is the due date of the bill. So suppose a person has sent the bill on 1st July. 1st July he sent the bill and the due date is 20th August. So 20th August will only be called as the due date. After 20th August, the bill will be overdue. Advances against undrawn balance of export bill. So in respect of export of certain commodity where exporter are required to draw the bill on overseas buyer up to 90 to 98% of the FOB, the residuary amount being undrawn balance is payable by the overseas after satisfying himself. Okay. So this residual value is there. For that also the advances can be given. Suppose a person sent the export bill for 1 lakh USD. Okay. 1 lakh USD he has sent the bill, so 90% he received. 90,000 he has received, but 10,000 will come after some expiry of some period. Okay. So for this residual value also, the bank can give the advance, bank can give the loan against this bill. So this $10,000 is there. For that, they can give the advance. And payment of undrawn balance is contingent in nature. That is also the risk that it is contingent. It may come, it may not come. So banks may consider granting advances against undrawn balance based on their commercial judgment and track record of the buyer. If buyer is having a good repute, so buyer will definitely give. But in some cases, the buyer may say that the goods are not up to the mark, or we got some damaged goods, we got some issue in some of the goods. So in that case, they may not give this 10,000. So in that case, bank has to see whether they are considering the advance or not based on the track record. Okay, next is advances against retention money. So in case of turnkey projects or construction contracts, progressive payments are made by overseas employer in respect of services segment of the contract. So retaining a small percentage of progressive payment as a retention money. Retention money is same like a bank guarantee we say. So a type of guarantee will be there if they are holding the amount. Okay. And it is payable after expiry of the period, stipulated period. And from the date of completion of the contract subject to obtention certificate from specified authority. So generally bank will not give loan, but there is a provision. If some like customer is very big customer, then bank may give the loan against this retention money also. Okay. So you just remember that retention money is same. Some money is retained. Okay. Same like we discussed here, undrawn balance. It's a type of undrawn balance only. Okay, so retention money may also be sometimes stipulated against the supply portion in case of turnkey projects. It may likewise arise in case of subcontracts. The payment of retention money is contingent. Again, same contingent in nature as it is a deferred liability. So risk is more with the bankers. Here one word is again coming, that is turnkey project. Turnkey project means a single person, a single company will be there, and that single company will be doing all sorts of job in that construction project. So no other person will be involved. So that type of projects are called turnkey projects. Okay. So the following guidelines should be followed in regard to grant advances against retention money. So these are the guidelines which to be followed by the banks. No advance may be granted against retention money relating to services portion of the contract. Exporter may be advised to arrange as far as possible provision of suitable guarantees instead of retention money. So banks may consider on a selective basis granting of advances against retention money relating to the supplier's portion of the contract, taking into account, among others, the size of the retention money accumulated, its impact on the liquid funds position of the exporter, and the past performance regarding the timely receipt of the retention money. The payment of retention money may be secured by LC or bank guarantee wherever possible because it is a contingent in nature. And next is where the retention money is payable within a period of 1 year from the date of shipment. According to the terms of contract, bank should charge prescribed rate of interest up to a maximum period of 90 days. The rate of interest prescribed for category ICNOS at post-shipment stage may be charged for the period beyond 90 days. So beyond 90 days, ICNOS rate of interest will be there. ICNOS means that the normal rate of interest which is uh, given by the banks. So that is ICNOS because the all the post shipment credits are given at a discounted rate of interest. Where the retention money is payable after a period of 1 year from the date of shipment, according to terms of the contract, and the corresponding advances is extended for a period exceeding 1 year, it will be treated as post-shipment credit given on deferred payment terms exceeding 1 year. And bank is free to decide rate of interest. So these are the A to F points are there which banks have to follow. Okay, export on consignment basis. So for consignment basis export, what are the guidelines for the credit? So first, export on consignment basis lends scope for a lot of misuse in the matter of repatriation of export proceeds. So therefore, export on consignment basis should be at par with export on outright sale basis on cash term in matters regarding the rate of interest to be charged by the banks on post-shipment credit. So the bank, they have to see that this export on consignment basis are properly happening because so much misuse is possible in this. And in case of export and consignment basis, even if extension in the period beyond 365 days is granted by FED for repatriation of export proceed, banks will charge appropriate prescribed rate of interest only up to notional due date, subject to maximum 365 days. So bank should charge the normal interest rate for export credit up to only 365 days. After that, if it is going, so that ICNOS rate that we seen here, that will be used. ICNOS rate is nothing. It's a rate that will be used by the bank when it is also in the case of post shipment credit also. We have seen. So suppose somebody has got a pre-shipment or post-shipment credit. Okay, they have got at the rate of 8%. But if they are not fulfilling the terms and condition, and within 365 days, all the transactions are not happening. And in this point, they are talking that within 90 days only it should happen. So then this ICNOS rate of interest will be there. And ICNOS rate of interest is a commercial rate of interest, like it will be around 14 to 15%. Depends on bank policy and guideline. It will be very high. So that will not be beneficial for the exporter. Okay, so here the maximum limit time period is 365 days. Export of precious and semi-precious stones. So precious and semi-precious stone are exported mostly on consignment basis, and exporter are not in a position to liquidate pre-shipment credit account with remittance received from abroad. Within a 365 days from the date of advance, bank may therefore adjust packing credit advance in case of consignment export as soon as export take place by transfer outstanding balance to a special account, which in turn should be adjusted as soon as relative proceeds are received from abroad, but not later than 365 days. So this point you have to remember every time the export credit rate of interest will be available to the exporters only up to 365 days. Beyond that, it will not be available. But RBI can give the permission that they can get the proceeds late also. But banks will not have to give the concessional rate beyond 365 days. Okay, export of goods for exhibition and sale. So bank may provide finance to exporters against goods sent for exhibition and sale abroad in normal course in the first instance and after the sale is completed. Allow the benefit of prescribed rate of interest on such advance both at the pre-shipment stage and at the post-shipment stage upon the stipulated period by way of a rebate. So such advances should be given in a separate account. So for exhibition and sale also the advances can be given. Post-shipment advances against duty drop entitlement. So bank may grant post-shipment advances to exporter against their duty drawback entitlement and covered by ECGC guarantee as provisionally certified by the custom authority, pending final sanction and payment. So the advance against duty drawback receivable can also be made available to exporter against export promotion copy of the shipping bill containing the AGM number issued by the custom department. Where necessary, the financing bank may have its lien. So lien can also be marked by the bank on that entitlement. An arrangement may be made with the designated bank to transfer fund to the financing bank as and when duty drawback is credited by the custom to exporter. So if bank is giving the duty drawback loan against that, so bank has to make the lien also on that duty drawback. So what will happen? This custom people, once it is finalized, once it is sanctioned, so bank will that custom will directly will make the payment to the designated bank. They will not make the payment to the customer. Next, ECGC whole turnover post shipment guarantee scheme. So this is also very important. From here, many time questions are asked in both the exam, whether it is international trade finance or certificate course in foreign exchange. So let's see. So whole turnover post shipment guarantee scheme of ECGC Limited provide protection to banks. Okay, this is for a bank against non-payment of post shipment credit by exporter. So banks may, in the interest of export promotion, considering opting for the whole turnover post shipment policy, the features, the salient features of the scheme may be obtained from the ECGC Limited. So, as a post-shipment guarantee is mainly intended to benefit the bank, the cost of premium in respect of whole turnover post-shipment guarantee taken out by bank may be absorbed by the bank and not passed on to the exporter. So, the premium will be paid by the banks because this will benefit the bank only. So, bank will be paying the premium. So, where the risks are covered by ECGC Limited, banks should not slacken their effort toward realization of their dues against long outstanding export bills. So, export to DTA to special economic zone units. So, to them also the credit can be given. Okay. Deemed export, rupee export credit. So, for deemed export also it can be given as per the RBI guideline. So some details are given here. That's just same. So banks may also extend rupee credit, pre-shipment, post-shipment credit for a maximum period of 30 days up to actual date of payment by the receiver of the goods, whichever is earlier. For supply of goods specified as deemed export under the same chapter of foreign trade policy from time to time. So post-supply advances would be treated overdue after 30 days. So in deemed export, it will be called overdue after 30 days. In cases where overdue credit are liquidated within 180 days from the notional due date, such that 210 days from the date of advance, the banks are required to charge for such extended period interest prescribed for the ACNOS. Again, ACNOS interest will be applied after the 30 days. Now, interest on the rupee export credit. So, what interest will be charged? The base rate system is applicable with effect from 1st July 2010. Accordingly, interest rates applicable for all tenor of rupee export credit advance are at or above base rate. So now it is repo rate. So whatever the repo rate is there, all the export will be above repo rate only. Okay, above repo rate. So first interest rate structure. So this all or nothing that we have to give the above the repo rate. Okay, base rate system will be applicable. Interest on pre-shipment credit. So these rates will vary from bank to bank. Some banks may take less, some banks may take higher rate. That depends on the bank. So in pre-shipment, the base rate is applicable from 1st July 2010 if pre-shipment advance are not liquidated from the proceed of bill on purchase discount on submission of export document within 360 days from the date of advances will not be treated as export credit ab initio. Okay, so this will not be taken as the export credit and same acknowledge rate will be applied. So in case of pre-shipment, 360 days you have to remember. So if export do not materialize at all, bank should charge relative packing credit domestic lending rate plus penal rate of interest, if any, to be decided by bank. Interest on post shipment. Early payment of export bill. In case advances against demand bill, if the bills are realized before expiry of the normal transit period, interest at the prescribed rate shall be charged from the date of advance till the date of realization. That is same that when realization has happened till that day only rate will be applied. So the date of realization of demand bill for this purpose would be the date on which proceeds get credited to the bank's nostro account. In case of advances credit against Udance export bill, interest as prescribed rate may be charged only up to notional or actual due date or the date on which export proceed get credited to the bank nostro account, whichever is earlier. Okay, here interest on post-shipment credit adjustment from rupee resources. So bank should adopt the following guideline to ensure uniformity in charging interest on post-shipment advance which are not adjusted in an approved manner due to non-accrual of foreign exchange and advances have to be adjusted out of the funds received from the ECGC in settlement of claim preferred on them on account of the relative export consignment. So here are some guidelines. This you have to just remember by heart, then only you can answer in the exam. See, ECGC admit the claim to the extent of 90% or 75%, and the exporter have to bring the balance 10%, 25% from their own rupee resources. So now part B is there, that is export credit in foreign currency. Till now, whatever we have discussed, that is export credit in rupee. So here all credit is given in rupee, but next point it is given in foreign currency only. So in this also mostly all the guidelines are same only. Only difference will be rate of interest because you are giving in the foreign currency. So this we will discuss friends in our next part, in our fourth part of this video. So I hope so. Till now all the things are clear and we're understanding all the points. So thank you friends. Thanks for watching. Have a nice day.